The stock market is a wild ride. It's exhilarating, terrifying, and everything in between. One day you're up, the next you're down. This volatility can wreak havoc on your emotions, especially if you're constantly checking your portfolio. Fear and greed are the two primary drivers of investor behavior. When the market is soaring, greed takes over. We become convinced that the good times will never end. We buy high, ignoring potential risks. When the market crashes, fear sets in. We sell low, afraid of losing everything. This emotional roller coaster is what prevents most investors from achieving their financial goals. They buy and sell at the worst possible times, driven by fear and greed rather than logic and planning. However, there's a better way. By cultivating a sense of Zen-like calm, we can ride out the market's ups and downs without making rash decisions. We can stay focused on our long-term goals and avoid the emotional traps that lead to poor investment outcomes. Zen philosophy emphasizes acceptance and living in the present moment. It encourages us to let go of our attachment to outcomes and find peace amidst uncertainty. This mindset is incredibly relevant to investing. The market is inherently unpredictable. No one, no matter how experienced or knowledgeable, can consistently predict its short-term movements. Trying to time the market is a fool's errand. It leads to anxiety, stress, and often financial losses. Instead of fighting against the unknown, embrace it. Accept that market fluctuations are normal and unavoidable. Don't try to predict every twist and turn. Focus on what you can control: your investment strategy, your risk tolerance, and your emotional response to market events. This doesn't mean becoming passive or indifferent to your investments. It means approaching them with a calm and rational mindset, regardless of market conditions. This Zen-like approach allows you to make sound decisions aligned with your long-term goals. So how do you cultivate this sense of Zen calm amidst the market's chaos? It starts with recognizing the emotional triggers that lead to poor investment decisions. For many, it's the constant bombardment of financial news and expert opinions. The 24/7 news cycle thrives on fear and uncertainty, often exaggerating market movements and creating unnecessary anxiety. Limit your exposure to this noise. Focus on reliable sources of information and avoid making impulsive decisions based on headlines. Another effective strategy is to create and stick to a well-defined investment plan. This plan should outline your financial goals, risk tolerance, and asset allocation. Having a plan provides a roadmap to follow, preventing emotional reactions from derailing your long-term strategy. Finally, practice mindfulness techniques like meditation or deep breathing. These practices can help you become more aware of your emotions, allowing you to observe them without judgment and react more thoughtfully to market fluctuations. One of the biggest challenges in maintaining a Zen-like approach to investing is separating short-term market noise from long-term trends. We get caught up in the daily fluctuations, forgetting that the market operates in cycles. Remember that investing is a marathon, not a sprint. Short-term volatility is inevitable. Trying to time the market or chase quick profits is a recipe for stress and often disappointment. Focus on the long game. Instead of fixating on daily price movements, look at the bigger picture. Are your investments aligned with your long-term goals? Is your portfolio diversified? Are you regularly contributing to your investments? By maintaining a long-term perspective, you can weather short-term storms with greater composure. You can view market downturns as opportunities to buy quality assets at discounted prices rather than reasons to panic and sell. Section 5. Mindfulness in the Market: Tools for Mental Clarity. In today's fast-paced world, cultivating mindfulness can be quite challenging. Thankfully, Various tools and techniques can help us incorporate mindfulness into our daily lives and investment practices. Meditation apps like Calm or Headspace offer guided meditations specifically designed to manage stress and anxiety. These apps can help you develop a greater sense of self-awareness and emotional regulation, which are crucial for making rational investment decisions. Journaling is another powerful tool for self-reflection and stress management. Regularly writing down your thoughts, feelings, and investment decisions can help you identify patterns in your behavior and make necessary adjustments. Furthermore, consider practicing gratitude exercises. Focusing on the positive aspects of your life, both within and outside of investing, can shift your mindset from scarcity to abundance, reducing anxiety and promoting contentment. Section 6. Case Studies in Calmness, Warren Buffett and Ray Dalio. The benefits of a Zen-like approach to investing are not just theoretical. Legendary investors like Warren Buffett and Ray Dalio embody this philosophy in their investment strategies and decision-making processes. Warren Buffett, known for his long-term value investing approach, famously advises investors to be fearful when others are greedy and greedy when others are fearful. This philosophy emphasizes emotional discipline and a contrarian mindset, crucial for navigating market cycles effectively. Ray Dalio, founder of Bridgewater Associates, advocates for a principle-based approach to investing and decision-making. He emphasizes the importance of having clear principles, stress testing them, and remaining open to learning from mistakes. Both Buffett and Dalio highlight the importance of emotional intelligence in investing. They demonstrate that by cultivating calmness, patience, and a long-term perspective, investors can achieve sustainable success despite market volatility. Investing can often feel like a solitary endeavor, but it doesn't have to be. Surrounding yourself with a supportive community can provide invaluable emotional support and guidance, especially during turbulent market periods. Online forums and investment communities offer platforms for investors of all levels to connect, share insights, and learn from each other's experiences. Engaging in these communities can provide a sense of belonging, reduce feelings of isolation, and offer diverse perspectives on market trends. Joining local investment clubs or attending financial literacy workshops can also provide opportunities for in-person interaction and learning. These settings foster a sense of camaraderie and allow you to learn from experienced investors in your community. Remember, you are not alone in navigating the complexities of the market. Seeking support from like-minded individuals can provide emotional resilience and valuable insights, contributing to a more balanced and fulfilling investment journey. Technology, often blamed for fueling market anxiety with its constant data streams and news updates, can also be a powerful tool for cultivating calmness and balance in investing. Platforms like Robinhood, while criticized for gamifying investing, can be used strategically to track your investments and make informed decisions without constant monitoring. Utilize features like notification settings to control the frequency and type of alerts you receive, minimizing unnecessary distractions. Complement these investment platforms with mindfulness apps like Calm, integrating moments of mindfulness and stress reduction techniques into your daily routine. Even short meditation sessions can significantly impact your ability to manage stress and approach investing with a calmer mindset. The key is to use technology intentionally and mindfully. Be selective about the apps you use, control your notifications, and leverage technology to support your overall well-being and investment goals. Adopting a Zen-like approach to investing is not about becoming indifferent to your finances. It's about cultivating a mindset that allows you to navigate the inevitable ups and downs of the market with greater clarity, patience, and resilience. This approach yields numerous benefits. It reduces stress and anxiety, allowing you to enjoy the process of building wealth rather than being consumed by market fluctuations. It enables you to make rational decisions aligned with your long-term goals, avoiding emotional traps that lead to costly mistakes. Moreover, a calm and balanced approach fosters greater consistency in your investment strategy. This consistency over time is what truly drives long-term wealth creation. By embracing the principles of Zen philosophy, acceptance, mindfulness, and a long-term perspective, you can transform your relationship with money, finding greater peace of mind and achieving lasting financial well-being. Mastering Zen in the stock market chaos is not about achieving superhuman levels of detachment. It's about cultivating a mindset that allows you to navigate the complexities of the market with greater awareness, resilience, and inner peace. By embracing the principles of Zen philosophy, incorporating mindfulness techniques, and learning from successful investors who embody this approach, you can transform your investment journey from a stressful endeavor into a more balanced and fulfilling pursuit of long-term financial well-being. Remember, true wealth encompasses more than just financial prosperity. It includes mental and emotional well-being. By cultivating inner peace, you create the foundation for lasting outer prosperity. As you navigate the exciting and sometimes daunting world of investing, remember that the greatest investment you can make is in your own peace of mind. By mastering the art of Zen investing, you empower yourself to achieve both inner peace and outer prosperity, creating a more fulfilling and meaningful relationship with your finances.